Hey guys, and welcome back to a new weekly outlook. We're gonna be looking at calendar week 50 now. And yeah, like always, we're gonna get started with Forex Factory. And right here we can see that once again on Monday we do not have any news. And then on Tuesday, followed with core CPI, CPI, and CPI month to month, CPI year to year. It's gonna be really interesting. CPI is usually a high impact news event. We had the NFP news event last Friday, and that already had some volatility with it. So I'm interested to see what's going to happen on Monday. I'm mainly gonna hold back because Mondays are usually the days where I tend to mess it up most of the time for the entire week ahead. I don't know why, but I just know that on Mondays, those are usually my worst trading days, statistically speaking. So I'm going to be holding back, maybe only using half the regular size that I would normally use, and see what we're going to get here on Tuesday with CPI news coming in. On Wednesday, also at 8:30, we have core PPI. Then here at 2 p.m., so during the New York PM session, we have FOMC news as well. And at 2:30, like always, the FOMC press conference. We're going to talk a little bit more about that in a few seconds. Here on Thursday at 8:30, we have the core retail sales and unemployment claims like every Thursday. And on Friday, we get 8:30 and 9:45 a.m. news. So pre-New York Open, post-New York Open, we get the flash manufacturing PMI news post New York Open and the Empire State Manufacturing Index at 8:30. So now let's take a closer look at the upcoming FOMC interest rate decision. And if we go to cmegroup.com/market/interest rate/CME FedWatch tool, we can see that the probability of no change, so no interest hike and interest ease, probability for that is 97.1%, and the probability for a hike is 2.9%. Of course, this doesn't have to be true, but very likely we're gonna see the interest rate remaining flat like we saw it during July, September, and November. The last rate hike we saw during June 2023. So let's see what happens. I don't think they're gonna start decreasing it before next year, maybe around March, something around that time. We will see, but yeah, I think that's just a good to know if you're really one of these fundamental analysis traders and not just trade what you see on the charts. So now let's also take a look at the seasonality chart, because we spoke about it last week and we anticipated more sorts of a choppy market condition, because that's what the 5, 10, and 15-year average usually does. And we can already see that we said no to that, and we're now at the all-time high year to date during December right here. You can see that comparing it to July. So that's very interesting. We saw an expansion during the first week of December already, or the second week, whatever you want to call it. And I think the CPI news week and coupled with the FOMC statement, that is really going to be the driver that's going to make or break the potential 2023 yearly all-time high. But let's get into the TradingView chart right ahead. So now we're right on TradingView, looking at ES1 on the monthly time frame using contract adjustment. Why am I using contract adjustment? Because if I type in ES here and look at the December contract, we can see that on the December contract, I don't have that option, and we're still below our yearly high right here from July 2023. And if I head back to ES1, yes, I do have the option to turn it off, and then it looks like we already took out that buy side. I don't really like using this option because it leaves behind huge gaps on the daily time frame. If I go to the daily time frame right here, I don't like it. Doesn't make sense to me. So in my opinion, we still haven't taken it out. But if you don't like to adjust for contract changes, then don't. That's just what I use and what I will keep on using. So, but let's get to the monthly time frame now. We can already see that December started off taking out November's buy side liquidity right above here. So we're now in Q4 at a new high, and to put it into perspective, we are just 74 points away from forming a new high for the year. And actually what's going to be interesting is if we're going to take a look at YM here as well. So YM, also adjusting for contract changes, already formed a new high of the year, which used to be July 2023. And if we don't adjust for contract changes, we're almost at the all-time high here on the Dow Jones. So, but I'm, like always, I just want to put it out there. Use whichever setting you like the most. And if we take a look at NQ didn't clear the yearly buy side, or the July high, or July high just yet. Also didn't clear the all-time high just yet, but it's not really far away from it. On NQ, we are only watching the close, 160 points away from forming a new high for the year. And if we turn off contract adjustment, we've already taken that, and we're actually not even that far away from forming a new all-time high. All right, but let's bring it back to ES, just a general indices update, market update. ES1. Yeah, I think we're pretty much done with the monthly. Let's drop it down to the weekly. So this has been our our last week right here. Looked bearish initially, but then we had that strong push after Thursday. And we had another higher low, higher high weekly candle. That's now the 1, 2, 3, 4, 5, 6th weekly candle where we've been putting in higher highs and higher lows. But we can slowly see that we are decreasing in candle body size, or at least that we're not expanding as rapidly as we have been right here until Monday or this week during November, 13th of November. We took the buy side, we're inside. Let me actually pull up the weekly analysis. The monthly is done. I'm not sure why that doesn't align anymore. September highs. Is that correct? We cleared that buy side. Let me get rid of that text. We have a inversion fair value gap right here. Where's that coming from? I don't know, but all I see here on the weekly is that did we close above? I think we looked at that last week. I'm not sure why all these boxes and levels are off now, but that's okay. Bearish fair value gap. Let's get rid of the 50% level here. We closed above it last week already. Retested our old inversion fair value gap, or basically this old high. So high, low, lower high, lower low. We break above it, we close above it. So now we look for support on old resistance, or at old resistance. Old high, forming that resistance, we close above. Now we hold support here, and actually completely close above that area. So on the weekly, what could we be looking at? First of all, this potential inversion fair value gap. Now it's gone because it doesn't show it to me on the weekly time frame. All right, so 2 inversion fair value gaps up here. Could almost call this a repair fair value gap because it's an older one. Bullish fair value gap, we cut for it once, twice, and now for a third time. We do not need this line anymore. Yeah, really here on the weekly, the next buy side liquidity would be coming in right here at 47 to 1 1/4, which right now is, like we said, 74 points away from last week's closing price. So now let's drop it down to the daily. We can't get too much information out of the weekly right now. So let's take a look at daily buy side liquidity targets heading into the next week. That's really what's most important. This trend line goes into the weekly analysis. Is that correct? Yeah. Let me fresh all that up. So in case we're going to be using it during the live streams, it's all here. Weekly. Why didn't that show earlier? Let's get rid of that. We don't need that. We don't really have to worry about stuff down here too much. We're up here right now. If we reverse and get all the way back down to here, we're gonna draw up the fair value gaps. But right now I like to keep it as clean as I can and only look at the fair value gaps that we could be using potentially heading into the next week. That's what I like to do on my Sunday nights, just to get a good outlook and a good idea of what I can work with going into the next week. All right, so now we're on the daily time frame. But something's not right. That's the Fibonacci retracement for the daily. That's our high of the year. All these fair value gaps are off. I'm not sure what happened here. So we might as well get rid of them. Get rid of this line, get rid of that line. That's our daily volume imbalance. We can keep that on. And I received a question why I'm not merging the daily volume imbalance and the daily bearish fair value gap right here. No, actually that's the daily volume imbalance right here. From close to close. And the fair value gap would go from wick to wick. That's exactly why. And that's only visible on the daily time frame. If we go to a lower time frame, then yeah, it wouldn't make sense to combine them. So I'm not doing that either on the daily time frame. All right, bearish fair value gap, that's in. We're just below that daily consequent encouragement. We already took out this high. We spoke about that high last week. And the previous week's high right here. So that's all cleared. Let's see where we closed. We closed just below that old high right here, that old daily buy side. So really, the next area of interest for me would be the 50% of the daily bearish value gap, and then the volume imbalance low right here, also on the daily time frame. We have to get through this. If we can manage to push through this, maybe with CPI news or FOMC, well, then I'm very confident that we are going to take out the high of the year right here, coming in at 4734. And right now this is looking rather bullish. I mean, we closed nicely up here. We had SMT divergence with NQ. Down here, if we look at the daily time frame, NQ didn't take out the slow right here. So I'd say I'm not here to call a top. I'm not here to say that we're gonna, unless Monday, Tuesday is gonna, I don't know, form a market structure shift here on the daily time frame. There's no reason for me to believe why we shouldn't continue higher. It wasn't really profitable being the bearish trader here throughout this entire run to the upside. If you would have tried to short this, well, that wouldn't have worked well. So that's why I just don't like trying to call a top. If the market is going up, the market is going up. We wait for our change in the state of delivery for us to update our bias. And right now that bias remains bullish for me. So I prefer long setups intraday from the low of the day. From what I'm looking at. So let's take a look at the hourly time frame here. That's our previous week's high. That's our old daily buy side. We've already cleared that last week Friday. Then if we look at the daily time on the 1 hour time frame, Friday, okay, that's still Friday. Okay, up close in candle, we took that buy side, we retraced to the downside, 11, 12, 13, 14, and then we broke the high again. So just based on the hourly heading into Monday, I want to see if the hourly 1 hour fair value gaps can hold price. I'm going to leave that on my chart. Fair value gap. And let's choose the fair value gap right here. Make this a dotted line, make it black. And black. Save as fair value gap. Save, yes, okay. All right, hourly time frame. Yeah, if I see those hourly fair value gaps fail, I'm also expecting support from this down closing candle right here because we closed above it. And then I would look for down closing candles to act as support within an uptrend. We filled the fair value gap down here. Yeah, I'd say early indication for us to potentially take out hourly lows would be if we close below these hourly bullish fair value gaps. Otherwise, I would be looking forward to target right here our daily bearish fair value gap, consequent encouragement, and the low of our daily bearish volume imbalance. If we go all the way over to here, no, that's looking fine. Let's refine that. So all of that is ready for next week. Yeah, those are really going to be my targets or my thought process going into Monday. I want to see this to be respected. We can also take a look at the 4-hour time frame. So this 1 hour fair value gap is also lining up nicely with a 4-hour bullish fair value gap. Depends what time frame you like better. If you prefer to watch the 4-hour fair value gaps or both, then put them on your chart. But I would use this area as invalidation right here. Nice V-shaped recovery on Thursday, little consolidation. Friday, expansion to the upside. We filled our lowest bullish value gap right here after taking sell side, not this sell side or this sell side on NQ. We actually took that sell side. And this is, well, I'm not here trying to look for a short, holding it all the way down to here. That's not the way how I trade usually anyway. But right now we're bullish. No reason for me to believe that we won't continue higher. And I'm going to be using this 4-hour bullish fair value gap and those two 1-hour bullish fair value gaps mainly to decide if we want to continue higher immediately to take out the consequent encouragement of our daily bearish fair value gap. Let's take a look at the 15-minute. Kept holding support nicely on this lowest 15-minute. This was the 8:30 NFP news candle. I already shared all my analysis about NFP right here. Where is it in the tape reading? No, here, NFP textbook. We took out the previous week's high. We were at the high of the month, high of the week, high of the day, with bearish SMT divergence between ES, the SP 500 and NASDAQ 100 right here. So we took out major buy side. We had our break in structure paired with a breaker block and bearish value gap for a nice short. Same thing here on NQ. We actually formed that higher high and then shifted structure. And then we continued lower back into the new week opening gap. And that's actually a nice little example of why, this is the 1 minute time frame by the way, why this 2022 model failed and this one worked. Well, here we still had the previous day's high as a target. We didn't clear that buy side. So now we see that high, higher low, higher high market structure shift. I'd be on the fence taking that because in my opinion, we didn't really take that buy side yet. And now we're just getting a bounce of the new day opening gap. This is looking kind of sus. You could still take it with lower risk if you are afraid to miss out on a 2022 setup. But if you would have been patient enough, knowing, okay, look, we cut through this previous day's high, leaving behind a nice inefficiency. Even if you enter on that inefficiency, of course, your stop loss would have to be rather big, but you could use the consequent encouragement as sort of a invalidation level and still get in long to target the previous week's high. And this would have been a nice move from 4646 to 4658. So basically a nice 10-point move here to the upside. Stop loss maybe on the midnight level. I like when we cut through previous days high, previous weeks high, leaving behind inefficiencies. But of course, now you might argue, why didn't we continue higher here then? Well, because we really didn't have any more targets further to the upside. As a little NFP session recap, 5-minute time frame, we already hit most of our objectives. Down here, we didn't. We cleared most of the objectives to the downside, and we showed signs that we do not want to continue lower. We shifted structure to the upside, leaving behind a bullish fair value gap, paired with a breaker block on a lower time frame. Entry right here, stop loss below this wick or this wick right here for the continuation up higher. Couldn't be much simpler if you ask me. And right now, if we look at the 5-minute time frame, we formed that higher high, higher low, but we didn't see the confirmed market structure shift yet. As we can see, we closed right here on this level. We do not have any 5-minute bearish inefficiencies. Let's take a look at the 15. Yeah, for the short term, I'm going to be looking for a retracement. Here on the 1 hour time frame, we see we already tapped this 1 hour bullish fair value gap and we rejected. But going into Monday, let's see, maybe we even get a new week opening gap. We see a little bit deeper of a retracement into these areas. If we look at this last expansion measured from the low to the high, consequent encouragement is sitting right here at 4649. That would be the low of this lowest 1 hour bullish fair value gap. But if we go back to the 4 hour, that would still be above the consequent encouragement of this 4 hour bullish fair value gap. That's really realistic to me. Look for a retracement into these lows or into these inefficiencies before we continue higher. Of course, we don't have to do that. We could also just continue higher first and then do the retracement midweek. Keep in mind, or be aware of the new schedule that's coming up. We have CPI high impact news on Tuesday and PPI news also on Wednesday at 8:30. And then during the PM session, we also have the FOMC news release. So Tuesday and Wednesday are going to be really deciding. We'll see. Usually I thrive on volatility. So I will be trading on these days and I will do a New York session live stream. We will see how that goes. And now I'm not going to take a look at NASDAQ and YM on the lower time frames because I like to specialize on ES. And now let's also take a look at the DXY to see how that would line up. So our bullish bias on ES, if that would line up with what we currently see on the DXY. They don't always move hand in hand because right here we saw that on the daily time frame we had a up closing candle on Friday. Usually if they would be perfectly inversely correlated, meaning DXY going up, the indices and stocks going down, we would have seen a down closing daily candle here on ES. Well, we didn't see that. So that's why I don't like to use it as real correlation, but it's good to keep track or be aware of what the DXY is up to. And therefore we're going to start off on the weekly time frame because on the weekly, that's my point of interest. We have this weekly bearish fair value gap right here. We already tapped into it and we immediately rejected from that area. We also have a weekly inversion fair value gap right here. We could be drawing this up on our chart from Monday, the 4th of September, right here that week. Call it a inversion fair value gap, but now it disappeared because it's not visible on a weekly time frame. We tapped into that, so that's really an area of interest to me. We also hit the 50% of our retracement right here. So we hit that 50%, we closed below, and now we're starting to retrace. Question is, are we going to continue higher from here or continue lower from here? Well, right now, there's no easy way in telling you the answer. I want to see what happens around this area. Right now, we're in bearish order flow. So what would I expect? Continuation further to the downside. That's a question that we tried to answer last week. We took a look at the monthly time frame here on the DXY. Let me just put this into a group called weekly. and hide all this and go to the monthly time frame. Because on a monthly, we reacted bearishly from this bearish monthly fair value gap, close below the monthly bullish fair value gap. Now we could also be looking for resistance around this level to take out sell side liquidity below. We hit the 50% of this entire range from 2021 to 2022 high. So 2023, looking at the DXY, has been a rather poor year. I mean, we didn't really expand, we didn't retrace. We consolidated for until August basically. Then we saw some movement to the upside, but immediately negated that. Monthly gap to the downside here on the DXY. So personally, I'd be looking for more sell side to be targeted before we eventually continue higher. We will see. The FOMC and CPI news event will also be the telling factors for the next weekly candle and what we could potentially be looking for. So let's bring it down to the daily and see if we can come up with some daily targets. Turn on our weekly analysis. So this is our weekly bearish fair value gap. Right here, we tap that. Turn on our daily analysis. All right, all that sell side has been taken. Once that's taken, we revert it back into it, close above our bearish fair value gap right here with this volume imbalance. That's fine. And then we close above. We use it as support to continue higher to take out daily highs. And we just wicked our most recent lower high. So potentially we could be looking at a market structure shift here on the DXY daily time frame if we see the candle close above here. So if we get that candle close, we could also be eyeing a potential left shoulder, head, right shoulder setup. Also a 2022 model, but I want to see a daily candle closing above 104.203 in order to be short-term bearish. We have our daily bearish value gap right here. We reacted from this before already, and it really comes down to the CPI and FOMC news event Tuesday, Wednesday. But those would be potential buy-side targets we already hit. This buy-side right here, but we didn't manage to close above it. This could be our potential market structure shift bullish. So I'm going to put that in here and put that in brackets. So we immediately know what we were talking about on our weekly outlook if we pull up the daily time frame here on the DXY. All right, that's our daily bearish value gap. Let's also extend that out. I'm just going to be using red lines here. We hit the 50%. We hit that bullish value gap. We retraced. We hit the golden ratio, 61.8 Fibonacci retracement level, not the optimum trade entry yet. And we started to push back into our range. That's going to be interesting. We're going to keep an eye on this exact level right here for a potential daily market structure shift that could fade our bias for higher prices on ES, but we will see. Take it one day at a time. I'm not going to be looking at EU. I mean, if we look for higher prices on the DXY, and right now it's really looking like it could be doing that, if we're being honest. We've been in bullish order flow, inversion fair value gap, we close above, leaving behind a new bullish fair value gap. We could actually be drawing it in here, and we're holding support. Bullish fair value gap right here. This could have been a nice play for a potential long. We take out all that sell side. We continue pushing out of this bullish fair value gap. Almost no wick to the downside here. Daily volume imbalance. And we take out our first short-term high. After we took that out, we move back into internal sell-side liquidity. Previous day's low and Tuesday's low right here. We wick that. Friday opens up and we continue to the upside to take out our high of the week right here from Wednesday. And once we hit that, we retrace. So the question is, Will we continue to go? Well, don't really like to have this inversion fair value gap on here on a daily time frame anymore, but I'm gonna leave it here. We close below, we use it perfectly as resistance, and we close above and close below. I don't really like to see that, but we will see right here. I keep that on because we use it as support, then we close below and use it as resistance to continue lower. But the main area of interest for me is going to be this high. If I see the close above that, we could really start to frame higher prices, or at least a pullback maybe into this daily bearish share value gap. Consequent encouragement right up in here, which lines up perfectly with the bodies of this short-term low, short-term high, continuation lower. Well, it's going to be interesting now having taken a look at DXY and ES, but yeah, well, good thing that we're not long-term swing trading investors. We don't really have to predict what's going to happen in the future. We simply going to use our 5-minute time frame or 15, sometimes even 1-minute time frames to look for a good opportunity where the odds are in our favor. Use good risk management. Like, okay, we cleared everything to the downside. We got our shift in structure. Not looking for a 100-point move. We're only looking for maybe 10 points into some nice higher time frame objectives, like right here by turning on the ICT all-in-one indicator. Where are we at? Where's it gone? 5-minute time frame. Let me copy that and paste it in here for it to refresh. Haven't opened my charts all weekend. If I wouldn't have been doing other stuff on Friday, avoiding the NFP news event, well, come on. That would have been a bread and butter setup. Bullish share value gap, new day opening gap, VWAP, market structure shift, breaker block. Getting in right here. 10 a.m. move to the upside, take a partial at the previous day's high or fully exit. Hold to the previous week's high. But well, no regrets. We had a fantastic week last week already, missing out on Friday's price action. But just look at this perfect precision. NFP open here on 8:30. We tap it and we move away from it. Midnight open. All these levels have been perfectly respected. That's really what we're looking for to, really confirm that algorithmic price delivery. And we see all that here. We reference midnight level twice here, reject from it. Reject from the CE of the new day opening gap. We push above it, leave behind the inefficiency, and we bounce off this level, taking out previous day high, previous week's high, this orange and red line. Where do we reject? To continue low again, previous week's high, heading down, back to the midnight level. We get our pullback inside of this bearish fair value gap mitigation block to continue lower. We cut through our midnight level, leaving behind a new inefficiency, bouncing off the new day opening gap. Well, where do we get in? Bearish fair value gap, aligning with the midnight level. I'd simply take a sell limit order right here from that midnight level, stop above this high, target, partial right here, of course, at the low, or maybe look for 5 points. Quick 5-point scalp using 1 mini contract, that's $250. Are the odds in your favor? I'd say so. If once we see the close above midnight, we could already take off some risk. Once we see the close above this bearish value gap, we can close the entire position, because then what we wanted to see didn't happen, and we're better off not taking or not waiting for our stop loss to be hit. At least that's my approach. And 5 points, the 8:30 level, 7.5 points almost. But look how perfectly with the bodies, like always, bodies tell a story and wicks do the damage, how we respect that midnight level. And that's really what we're looking for. And then we leave behind a breakaway fair value gap and another fair value gap, shift structuring in, leaving everyone behind waiting for a pullback. Well, I didn't see that pullback, and the next fair value gap we actually left behind happened right here at 1:45 p.m. and we just continued to push through a new high. So the question is, how could we have gotten into this? Well, volume imbalance entries. Let me actually hide all the higher time frame stuff here quickly and the hourly and do up some drawings. Bullish volume imbalance we get in on right here. Let's see, this was our highest bearish fair value gap. When did we close above that? We closed above and below. I don't like that for a continuation entry. But once we closed below, we immediately gapped to the upside, so we could give it a second chance here. We closed below, but we didn't open below. We opened right back at the low of our inversion fair value gap and then closed back above it. Goes sideways for 10 minutes. And then with that new hourly candle, look at the time down here. It's 1:55 p.m. We have a little gap on the hourly time frame. I'd simply place my limit order right here, put my stop below here, because if we want to continue higher, with using the inversion fair value gap as support, this potential order block right here with no wick to the upside and another bullish fair value gap, if it retraces, I would even add to the position, but just to make sure that I get in, quick 5-point move back into the previous week's high, why not? Would have played out really, really well. Close back above the new week opening gap, hold support, continue higher. Volume imbalance, entry, continuation higher. Right here we actually have SMT divergence using the ICT all-in-one indicator between the SN and Q. And yeah, no, we already spoke about that on a 5-minute time frame. We didn't shift structure. So we will see. Could be a potential head and shoulder setup here for a short-term retracement. We will see how that plays out. Well, I might not be avoiding NFP news events going into the next year. I would have to take a closer look at the past NFP events, but if you would have waited for all this mess to clear out, wait for 9:30 to open up, give it some time to react to the news, simply by staying on a 5-minute time frame, you have all the time in the world. 5 minutes, it's more relaxed than a 1-minute time frame, and then we got a market structure shift. Moving away from all that stuff we cleared here to the downside. Well, of course, the potential is there that we chop, but we also still didn't clear our previous day's high. It looked like we're going to do that, and right here during London, we actually had awesome setups. If you remember, here on Discord with the VIP members, I shared the first trade idea right here. No, that was the day before. Yeah, right here. 8th of December at 9:20 a.m. my time. Waiting for the close above. We had 6 more seconds on the clock. And then I quickly draw up the fair value gap and this little arrow sign that I'm going to take a long of this area. Target low hanging fruit, 5 points. That's where I got in on my new CFD account. I made a video about this on my YouTube channel. And then right here in the VIP chat, was it in the VIP chat? Yeah, I was looking for a continuation, because if we continue higher, the only area where it would make sense to continue higher from would be this unfilled volume imbalance paired with a inversion fair value gap, paired with a bullish fair value gap after shifting structure. Momentum is bullish. I continue with the momentum, and that's exactly what happened right here. Got in on that second trade, on that inefficiency, and hit all my targets. So that was really nice during the London session to be able to, go to the charts at 3 a.m. Not even to my working space, just looking at it on my phone, because I wasn't really interested to even engage on NFP unless I see something clean. Used lower risk than I usually do, and my targets have been hit. And instead of clearing the previous day's high during London, not really being far away from that, I've only missed it by 2 points without giving us any warning signs. No market structure shift yet up until here. No nice inversion fair value gaps, at least on a 5-minute time frame. We immediately drop, taking out the low of the day. And from here, we started to chop and wait for 830 to come in, take out pending longs, take out pending shorts or trigger them, immediately move away from that. We wait for New York to open up. Okay, so what happens? New York opens up, we move to the upside, 940, we shift structure. Okay, interesting. Oh, we also leave behind a bullish fair value gap. This might be interesting. This indicates to me that we might want to hit now our previous day's high. Well, anyway, just a little recap of what happened on Friday. Hopefully some of you, now, well, I don't want to say hopefully because it tends to be more risky to trade on a NFP news event day than simply by avoiding it. So yeah, that's gonna be it for the weekly outlook. We spoke about our higher time frame stuff, especially right here. I'm gonna leave that on heading into Monday. Our 1 hour and 4 hour bullish fair value gaps below us, our daily bearish fair value gap, our daily volume imbalance, and our high of the year coming in at 4734. Targets to the upside, potential areas where we could see the bounce from, 1 and 4 hour fair value gaps. Right now, not really looking for shorts until we get at least a 15 to 1 hour time frame change in the side of delivery, and by that I mean a bearish market structure shift. Up until then, I think we could potentially be leaving this range. Of course, that's what we have been doing this entire time, being in this range. We take out highs, continue lower to take out lows. Once we take out the lows, we continue back up to take out the highs, just to take out the lows again. Didn't manage to take out this high right here on Wednesday, but we managed to take out the lows again. Then we went immediately back up to take out the highs again. So the potential is there that we could see a move back into the lows. I wouldn't be surprised. I mean, that's what we have been doing. But, well, targets to the upside where we could see it continue back inside of our range, daily volume imbalance, and 50% of our daily bearish fair value gap. Like I said, I'm a scalper. I'm not really looking for the swing trades. I'm happy with 5 to 15 points. I'm not looking for that monster trade. It's much more harder to catch on a daily basis than simply looking for a 5 to 15 point move with good risk management to, trade for a living. All right, guys, thanks very much for joining in today and watching this video. I hope you enjoyed it and you have learned something new. And yeah, I will be back on a live stream during the New York session on Monday. All right, guys, take care and enjoy the rest of your Sunday night. Bye.